Hi, I'm Jimmy. In this video, we're looking at the recent CrowdStrike outage. So we're going to look quickly at what happened. Then we're going to try to look at the impact on investors. Is there actually an opportunity with the pullback in CrowdStrike stock? Is there an opportunity in that today? And then we're going to wrap it up with some overall opportunities and risks that are now in place and also could present themselves, opportunities that could present themselves in CrowdStrike or even in other investment in other industries associated with this. Okay, so basically on Friday, July 19th, CrowdStrike issues an update specifically in their Falcon sensor software, and they do a routine update. And with that update, well, there's an error in the file, and that error causes massive problems very fast. Basically, the Falcon sensor, which was the file that was updated, the Falcon sensor platform is embedded in a lot of computers because one of the things that it's trying to do is trying to detect malware on computers, and it's trying to do it in real time. So because it's trying to do things in real time, it's deeply embedded in a lot of the systems that it's on, so it can detect what's happening with the computer in real time. So when an error happened in that file, in the update that came through in the Falcon sensor software, well, the moment that error happened, well, things got real bad real fast. Anybody whose computer was up, particularly computers running Microsoft Windows software, were getting the blue screen of death, and it became a massive problem for companies all over the world. So this affected industries like the airline industry. A company like Delta got really smacked around. They had a whole ton of cancellations for many, many days after the outage happened, although other airlines were also affected. You had banks were affected. There were some trading institutions that were affected. There was the healthcare industry got affected. There were some healthcare systems that went down. Mass General in Boston, for example, went down for a while, and that becomes a real problem. They had broadcasting companies. A company like BBC had trouble pushing out some of their broadcasts, some of their channels in the period after the faulty error went out. After the faulty file went out. By the way, CrowdStrike issues this update. It causes a problem. They pulled it back fairly quickly. You're talking like 15 minutes. But one of the real problems that companies were having was in order to fix the problem, they had to manually do it. So they had to get on the phone with CrowdStrike and manually figure out how to fix it. And obviously, that's a logistical nightmare. And although they were able to pull the problem out, I believe that they pulled the update off the thing. It was like 15 minutes later. But by that time, clearly the damage was done. In fact, if you go to a company like Delta, well, there were thousands of flight cancellations. And right now, we're about a week after this initial CrowdStrike outage happened, and Delta is still experiencing problems. They're the worst of all the airlines as far as how CrowdStrike has impacted them. And last I saw, this stock's down about 5% or so. You have a company like Bank of America. They had some issues. Their stock is down a little bit, down 1% or 2% since this update happened. You have a company like Microsoft. This obviously affected Microsoft computers, their whole Windows platform, but it also happened largely on Azure servers. They, on the other hand, are doing fairly well. They're up. This is a fairly bulletproof company. They're coming out with earnings soon, and we're going to be releasing a video on them in the near future to continue our Magnificent Seven series. Okay, so that gives us a quick glance as to the peripheral companies affected by the CrowdStrike outage. But before we move on from that too far, before we get into some of the CrowdStrike numbers, I just want to talk a bit about some examples of where I think industries could really be affected. So in doing research about the CrowdStrike outage, well, I happened to come across a Bloomberg article who had this chart in their article. And this is coming out of the Federal Reserve. And basically, it lists the dollar risk of the stress testing that has been done on the big banks recently. So we can see we get some big ones like a credit card risk, clearly $175 billion risk to the biggest banks in the United States, or really global banks, but $175 billion, well, that kind of makes sense. Credit cards are a natural part of their business. But it struck me as interesting that operational risk is nearly $200 billion. So I think that the impact, or one of the things that I'm semi optimistic about from a global perspective, from an investing perspective, is do companies get proactive about having sort of redundancy checks and having backups? If they're using CrowdStrike, can they also use another firm as a backup? Do they have to build internal firms, not internal firms, do they have to build internal software to help offset something like this happening? Do they perhaps put in a delay to initiating these updates? So maybe if a whole bunch of, people start crashing around the world, maybe their stuff doesn't go down because they initiated an hour delay or something. Point is that I think companies have to spend a lot more money. Banks, financial institutions are a good example of companies that should spend more money in the research and development area to get ahead of potential problems, because it might just be an added cost in the near term. And hopefully it never becomes necessary. But if it ever does, I think the companies that get proactive about it are likely to do better long term. The exact opposite example of that is Delta. Like I said, Delta has had tons of flights canceled, and this is likely to hurt Delta in so many different ways. Now, I would also bring out that this is likely to lead some, let's call them lawsuits, from companies, customers, whatever it is, over to CrowdStrike. That being said, let's jump a bit into the numbers. So our question is, as a potential investor in CrowdStrike, I don't own any CrowdStrike, but as a potential investor, my real question was, well, has anything happened like this in the past? I was looking for similarities of instances where this has happened. And this actually happened to McAfee, the software security company. They did a very similar thing. They had a software error. It caused a whole bunch of problems, a whole bunch of computers. That was back when Windows had Windows XP. They crashed. It was a big thing, a lot like this is, just, almost 15 years ago. So it's a little more forgotten. Well, I went back and did a little research back at that, what happened during that time period. Well, the thing that struck me is, now let me zoom in a little bit just to make this chart a little bit more readable. Well, the thing that struck me is that, as you might be able to guess from this chart here, well, in April of 2010, McAfee had their issue. And the stock it pulled back immediately, and it kept drifting lower until it ended up being down about 25%. Now, I'm not suggesting that this will happen with CrowdStrike, but interestingly, you might notice that shortly after that 25% decline, there was a massive jump in it. And that actually happened because, as you might guess, by looking at the drastic jump in a single day, well, back then, it was announced that Intel was going to be buying McAfee for $48 a share. So the stock jumped up near there, ended up closing early the next year, $48 a share. So from an investment standpoint, if you had owned it beforehand and then held it through to the end, well, you would have been up about 18, 19, 20%. So from a similar example back in history, maybe McAfee is something to consider. But I think that there's something else from how this affects CrowdStrike. So clearly, this is going to be a reputational hit, a reputational black eye. Now, I don't use CrowdStrike, but I was reading through a whole bunch of stuff from long before this issue happened, and CrowdStrike's reputation appears to be quite good in the industry. So I truly believe that the black eye is likely to be, the reputational hit is likely to be limited in duration. I think it's only going to stick around for so long. Now, we saw in that chart of McAfee that the stock gradually drifted lower for a while. It's only been a week now for CrowdStrike, so this could go on for a bit. But I think that if the reputational hit is limited in duration, it's only going to be around for a little bit of time, well, it's likely that the financial impact from the problems that this CrowdStrike outage is causing, I think that that's likely to be temporary as well. And I think at this stage of the game, it's really difficult to predict how big those problems are really going to be, because surely this is going to hurt the company's churn, the customer churn. If they lose on average, I don't know what their numbers are. I didn't find any specific numbers But if they're losing on average 10 or 20% a year on an annual basis, does that go to 15 or 25? Or does it go to 40 over the next year? Is there a massive decline? Or maybe they have to offer some sort of crazy discounts to people to keep them on board to try to get them. Because don't forget, these systems that CrowdStrike has are generally well integrated into what a company does. Hence the whole problem Delta's having. So I think that it's possible that they keep them around, but surely this could impact their revenue. Now, when we jump over to a revenue chart, well, we can see that revenue has done a fantastic job of growing, but surely that growth rate is going to decline. And by the way, all the charts you're going to see going forward and all the valuation tools that we're going to use to try to come up with a fair value for CrowdStrike stock are coming from a website that we built, investorsgrow.com. If you want to come over and check it out, see what analysts are saying about, what analyst numbers are coming up with for different companies, try to come up with a fair value of stocks quickly. We do different live streams each week. If you want to check us out, I will leave a link in the description below. It's investorsgrow.com. But this brings us back to the problem. So, okay, surely revenue growth is going to decline a little bit, or revenue growth rate is going to decline a little bit. What about profit? And I think that this is really the problem that I have with CrowdStrike. Now, I had not done a deep dive on CrowdStrike before this whole outage happened. And frankly, I spent most of my time in my analysis for this trying to understand the outage and the impact and if there were any real opportunities. That's what as an investor, that's what I'm looking for. But I came across the chart of net income. This is profit. How much money are they making? And outside of last year, this has been a very unprofitable company. So although we saw all the revenue growth, the fact that they had so many losses for so long, in my mind, is a massive problem. Now, I know what you're thinking. They just recently went profitable. But here's my thing is I started my analysis after I tried to understand what happened. I said, okay, started looking at some of the numbers, looked at revenue. Revenue we saw was growing nicely. But then I got here and I realized, well, they have a long history of not profitable and a real small amount of wiggle room right now. Because last fiscal year, they only made $89 million in profit. Well, surely they're going to get hit worse than that this year, which to me tells me that they're likely to go back in the negative here. And from an investing standpoint, I just have trouble with, I'm okay with the negative side if long term they're going to turn it around. And indications are, assuming that we're right, that the reputational hit over the long run is limited and, eventually they'll make their way back. Surely this will end up behind them at some point. But then that all leads to, if we're going to buy a stock that could, again, go negative from a profit standpoint, I want to buy it as a good value. So when we jump over to our free cash flow chart, first, I would point out that the early years here, the dark blue ones where they went positive, those are historical numbers. So they actually were positive free cash flow numbers before they were positive profit. And then we have analyst estimates. So the green bars are analyst estimates. So we get on the website investorsgrow.com, we get analyst estimates for free cash flow for thousands of companies from around the world. And these numbers, I check these, some of these numbers are after their post the CrowdStrike outage. Now, analysts from the reports that I was able to read and the analysis I was able to do are likely to keep changing these numbers as they get a better grasp on the long-term trajectory of free cash flow, profit, revenue, all of that stuff. They have to see the impact of how many customers are going to leave, how many new ones are going to get in, what's the change in trajectory going to look like for CrowdStrike? Well, here's my issue going back to the fact that net income was not profitable. And this chart's kind of impressive from a free cash flow perspective. Well, if you take this impressive free cash flow and you apply a discounted cash flow calculation to it, well, we end up with a fair value of about $142 per share. Right now, the stock is in the 250 range, and that's after a massive pullback in the stock. And it still looks obscenely undervalued, obscenely overvalued. Now, we are only going out 3 years, and then we assume very conservative growth after. That's the baseline assumption for a discounted cash flow calculation, that you assume conservative growth after your projection period. So what if we were to extend out our projection period? So here, basically what I did is we have analyst estimates for free cash flow. Those are the green bars. And then the computer calculates based on historical average, and it gradually decreases the growth rate over the coming years. So the final 2 years will be closer to the long-term growth rate than the first 2 years. So the growth rate gradually decreases, but it makes the numbers more realistic that a company would hit something like that. So then the question is, do we think a decade out from now, CrowdStrike is going to have about $4.5 billion in free cash flow? To me, that seems reasonable. I think that's a reasonable amount of time. By that point, most of that will be forgotten, just like most of us forgot about McAfee. Well, with these numbers, if we apply this to our discounted cash flow calculator, well, now we get a fair value of $217. And again, the stock is up in the $250, $260 range, and it's still 20% overvalued, give or take, after a big pullback in this stock. So in my mind, I think it makes more sense to hold off on CrowdStrike. In fact, I think we're far better off looking at some of the competitors, as it's possible some companies, whether they keep CrowdStrike or get rid of them, if they get rid of them, some competitors of CrowdStrike could be the beneficiary here. Or even if they don't get rid of them, like I said before, there might be some redundancy needs to prevent things like this happening going forward. And it's possible other companies are there to try to fill in that gap, and maybe they can pick up some of the slack, some of them, some of the benefits of CrowdStrike's error. So for me, on a personal basis, I have to pass on this one. And if, like I said before, if you want to get access to this website, I will leave a link in the description below. And if you want to learn how to do a deep dive on individual companies, I actually did a video called 8 Steps to Analyze the Stock. That's right here. Link in the description below for that video as well. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.